We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. Now, as my listeners are very well aware, I try to do names as very best as I can, but today I have Lane Kawaoka. Did I get that right?
Yeah, you actually got it right, man.
With simplepassivecashflow.com. He's going to talk with us a little bit about his areas of expertise. We were just chatting a little bit before the show about what we should talk about. And I told him that my audience likes to hear about capital raising. They like to hear about stories about capital raising, stories about making passive income, planting the seeds of passive income, whatever that kind of stuff is. So Lane, welcome to the show. We'd like to hear a little bit more about where you come from, how you got here, but welcome.
Yeah, thanks for having me. Today, own over 8,000 rentals.
Oh, wow.
I think $1.2 billion of assets under ownership. But it didn't always start off like that, right? I mean, bought my first rental 2009. At that time, I was still working as an engineer. Just saving my money, saving like 50, 80 grand a year to just pour into rental properties. And that was kind of my life from 2009 to 2015. And when I had 11 of those little turnkey rentals scattered across the country with 3 different property managers, I realized that little rental properties are kind of a pain in the butt. And I decided to invest passively in syndications. And that was kind of the pivot point, I'd say.
Sure. So rather than having the hassle of, I guess, were you maintaining all of those yourself, you said?
Well, I had a property manager.
Management companies?
Yeah, I don't have time for that stuff, right? I mean, that's kind of the life of like the working professional. To me, I think if you're making more than 60, 80 grand a year, you really shouldn't be screwing around, flipping houses, doing like the physical work yourself, or even playing property manager. It's just not a good highest and best use for your time.
Yep, I agree with that 100%. I couldn't agree with that more, actually, because you're basically taking yourself and doing something that's a $40 an hour job when you could be making far more per hour if you were looking at it at a per hour basis than you would with that. And so I know right now there seems to be a shortage of those workforce kind of folks to get stuff done, but still, I agree with you 100%. So let's talk a little bit. So your first kind of syndication or your first kind of deal, did it come from along in like 2015, 2016? Is that right? Did I get that right?
Yeah, that's correct.
Okay. And what was your first deal and how did that kind of become something now, did you syndicate that?
Well, it's actually in the beginning, I was just investing as a passive.
Into syndications.
Yeah, I mean, I was going around at that time looking for deals, doing everything they tell you you're supposed to do. That's kind of a waste of time. Like, go on LoopNet, talk to all these like brokers and like who are kind of on the lower end of the food chain in terms of the broker world. Build relationships with them, take them chocolates, try and take them to lunch. That was kind of the grind for about, I would say like 18 months to 2 years.
Okay.
And I think this kind of started 2015. And then 2016, I just kind of realized, well, I wasn't really getting anywhere, as most people are. I would say like less than 5% of people who actually do this for consistently for a couple of years actually get anywhere doing this type of stuff. Because from a broker's perspective, giving somebody a deal is just silly. You got to feed your best clients, your top 1% of clients who actually close. So if you haven't closed the deal, it's going to be very hard for them to send you a deal unless you just happen to be top of mind and, kind of banging on their door for 2 years. and they kind of like you and when they want to give you a chance.
Yep.
So, that was kind of the grind, and I was kind of realizing I wasn't getting anywhere fast. So I was like, well, let me at least go into some deals as a passive because I had money, piling up for my day job, and I had like these rentals that I just really didn't want to own anymore that I was trying to sell off a little bit. So I had to go into deals to get the bonus depreciation and offset the capital gain and depreciation recapture from my rental properties.
Yep.
So and I was kind of like, well, I don't own any rental properties. I can't even use the old like trickaroo to if I'm a passive investor to say I'm a owner.
Yep.
So I just decided to just go in as LP, and in hindsight, it was kind of a good idea because it gave me like the ability to see from the other side of the perspective, right? Being a passive investor, what are the kind of things that I like to see on reports? What are just if not, I mean, it's. I think that empathy is very important to be able to be on that other side of the table as a
Sure.
passive
Sure.
investor.
Yeah, and it also gives you an idea from both the operational side as well as the marketing side. Like what types of marketing were you really responding to? It gives you good insight into the demographic that you were coming from, like an engineer, for instance. And engineer is actually one of my avatars. But coming from an engineering standpoint, it lets you know, it gives you an idea of what you responded to get to where you were. And then from the operational standpoint, saying, hey, so and so may not really care. I don't care so much about these numbers, but hey, this is really what I'm looking at. And then it gives you an idea to really kind of bolster those numbers when it comes time to report to the people that invest with you, right?
Yeah, I mean, at the end of the day, 95% of the questions, and even I would say 99% of my questions is like, all right, I don't give a rip what the property's doing. What's going on with my distribution? Am I going to be getting it, or is it be higher or lower? That's what people care, right? I mean, especially people who are in more than a dozen deals that actually, don't have any time to just bird dog one or two properties,
Yeah.
you know.
Yeah,
And
well, it gives you an opportunity to get into a couple of different deals, and well, and just like our fund of funds that we have, it gives you an idea. It gives you a way to diversify as well. I mean, then you know what points to diversify off of. Do you know what I'm saying? Whether it be geography or whether it be operator or whether it be whatever the case is, it lets you diversify whatever makes you feel the most comfortable.
yeah, and also like you can go into different asset classes, and you can you build your own portfolio that way as a passive investor.
Yep.
Um, and yeah, exactly what you're saying too on the front end, right? On the marketing side, I mean, as a passive investor, you just see so many deals out there and so many ways it's marketed. And it's funny because everybody kind of uses the same, three circle thing. And I don't know where that came from back in 2017, but it's like all that marketing doesn't really mean anything
Yep.
at the end of the day,
Show me
right? It's not.
something. Show me something of show me something of sustenance. Show
Yeah,
me something that you.
they never give P&Ls, rent rolls. You never get any of that raw data as a passive investor. You just get the projections at the end, and you don't even really get the assumptions, like with the reversion cap rate, rent increases per year, that type of stuff. The assumptions got used to get to those numbers at the end of the day. So, I think as a passive investor, I kind of realized this early, and I was like, well, I just got to build relationships with other passive investors to figure out, well, who's legit here, because all this PDF and this 2-hour webinar means nothing. It's just a
Yep.
marketing pitch.
Yeah.
And
Yeah.
I mean, it took me a long time to invest even as a passive. I was just,
But so it took you a long time to invest as a passive, but at the end of the day, did you learn anything from those other things that from the marketing stuff that led you to at the end actually say, "Hey, this is my horse or this is my guy or this is my lady I'm going to invest with?"
yeah, I mean, I think I realized, well, everybody's a really good marketer, right? You just go on Fiverr and get the same like Filipino VA to make them, and it's not that hard to like show all the good things and not show any of the bad things.
That's
That I
right.
realized that, I just got to go find passive investors that have invested with these people in the past, build organic relationships with these people and then try and kind of weasel my way into getting the real scoops of people. And after a while, it was kind of like, well, I figured out who were the good people, who were the kind of people who were newbies or people potentially to stay away from. And at some point, I was kind of like, well, and I think all passive investors get there, right? You just have to kind of take the leap of faith with the jockeys, the operators that kind of have a decent track record. They at least aren't going to steal your money, right? To at least eliminate that counterparty risk of somebody
Yeah,
just taking your money and going off to Mexico. And
that's right.
hopefully you can also eliminate the risk that you're just investing with an incompetent person. Not just
Somebody
because
that,
somebody,
yeah,
yeah, just because somebody's had a full cycle deal that has gotten successful, I mean, doesn't mean that they're competent. Yeah, I guess it sort of eliminates the fact that they're honest and they're at least not going to steal your money and run.
yeah.
That's for sure. And they're trying to build a sustainable business with people, friends of friends telling friends of friends about you. Um, but yeah, I mean, I think that's the biggest thing. Like in this world, like I mean, these real estate deals they kind of run themselves if you write the right one. It's more, are you working with an honest person? And cross your fingers that they're competent.
Yep. That's exactly right. Or cross your fingers that yeah, that they know, like, the biggest my biggest problem with the way the market is right now, or has been, is these guys that are underwriting rent increases. And don't get me wrong, I feel like you can justify some of that. And you can justify that being part of your plan. But when you go in and you're looking at the underwriting today as the asset sits and it really looks good, and then you say, okay, well, 80% of our approach is going to be we're going to increase the rents, and then 20% of our approach is we're going to add a couple of vending machines and some covered parking. I'm just going to use this as an example, but when you start looking at saying, okay, hey, the bulk of our asset increase, our asset value increase is based off of the fact that now we're going to be charging this rent instead of this rent. Man, I really got a problem with that. And some of these guys I think are going to ultimately be proven to be bozos at the end, because there's in America anyway, and maybe everywhere in the world, we have a tendency to, when something's working, to everybody pile on. And it's that theory of saying, okay, multifamily housing is really where it's at. Well, then what happens in 10 years? We're way overbuilt on stuff. It's just like anything else. Um, and when you get overbuilt, a lot of those people, that stuff tends to kind of balance itself out. So no, I agree with you. And now what are some things that you look for in a deal? Like, go back to yourself in 2015, 16. What were some of the very specific things that you looked for, or questions you asked to, you said you built an organic relationship with people that had been in other deals passively so that you could kind of start filling out who the best operators were. What were some of the things that you were looking for?
Well, I mean, I luckily was able to underwrite deals, take P&Ls, and
Okay.
minerals load into the model, which I would say 99% of passive investors are not able to do. Um, but I mean, going back to what you're saying about like the rent increases being kind of fudge, to me, there are three or four major like knobs to turn or levers that turn on that underwriting spreadsheet. It's the rent increases, um, expenses. You can, it's kind of hard to fudge that, but like the reversion cap rate and the rent increases per year, those the rent increases per year and the reversion cap rate, that's very easy to identify and call out as like, what are you guys doing? You guys are being like not conservative. You guys are being aggressive. But that rent comps is always the hardest thing, especially for passive investors, even for like sophisticated underwriters, to be able to kind of call out and say, well, that's a little getting overheated there or not. And I think
Yeah.
that's from somebody who's trying to sneak it past some investors or sneak it past like more of an elder source or like an approval source. It's the rent increases per year is always going to be the hard one to verify. Now, I mean, passive investors or sophisticated investors could go around and knock on doors and tour other comparables in the area. if there's comparables, maybe I mean, if you're not in Dallas or some Houston or where there's a lot of saturation and a lot of comparables in like a 1 mile radius, then it's gonna be tough. Uh, but yeah, unless you walk those other properties and walk that property, you're not gonna get a sense on like pictures from the outside. The pictures
Yeah.
on all these 2, 3 star properties all look alike, but like being able to like walk those other properties, and sure they're all like 1984, 1988 vintage, but you don't know anything that's happening in the property. You don't know if they've renovated interior units or done some exterior improvements, and you certainly don't know what their balance sheet and P&L is, right? So, and I mean, maybe you could figure out what their occupancy is by going in there and walking in there, but like you just don't know, and trying to use that to verify what the operators comparable rents are, it's just not, it's
It's
just not going to
tough,
be
man.
good.
It's tough. I'm telling you. And some of these marketing packages, yeah, man. I mean, you know, I don't know. I don't know. I'm fearful for what could potentially. And the fact of the matter is that some of this stuff, some of these marketing packages are outweighing the fact that something only has a 3.5 or 4% cap rate. And while I get that the cap rates have compressed and things aren't near as you know as fun or as great as they once were, you just have to be careful because you don't want to set your expectations here. And as an operator or a syndicator or a sponsor or whatever you want to call it, set their expectations here and then only perform here, because then all you end up with is everybody's pissed off and nobody's made any money, and everybody's just kind of walking around looking at one another. And so yeah, there's definitely some dangers in that. Now, when you what was so you when you invested passively, now we want to talk a little bit about you're actively doing syndications, right?
Yeah, yeah.
What was your first syndication that you did, and how did that go? And where did you raise the money for the equity to start with on that deal?
Um, I think the first ones, I can't remember what the first deals was. I mean, we've done over 50 of them. I can't. I think the first few all hit us at the same time too. They stacked each other, which
Okay.
is probably not a good idea to do. You probably want to do a concentrated, focused effort on one.
Sure, sure,
Um,
sure. Yeah.
but I think what it was like I mean, the first investors were friends and family, but I
Okay.
already had like a pretty big audience following me and trusted me, because prior to doing all this, I was kind of teaching people how to buy little turnkey rentals, little rental properties. So people kind
Sure.
of saw there was a track record there with that, and I just had the personal realization that that stuff kind of sucked, and I was personally going into these syndications myself later. So that was kind of where people eventually followed me. But that first ones, I mean, yeah, it was. I guess I wouldn't say any of my none of my family do this. None of all my family are kind of broke. Don't have money to do this stuff. They're more rule followers and invest in the 401k type of stuff. But yeah, definitely like that. Those friends that I initially found back in, I think when I really started to interact with people back in 2014 and 15 on the internet, and then I met a lot of these people in real life, and they just kind of invest alongside as I went into stuff personally. Um,
Sure.
then it kind of just expanded from there. I mean, I think the first one of the more vivid ones I remember was like the capital raise was like 1.1 million, and it was just like it was just a real struggle to get there. And I looked back and I was like, wow, there were like, God, man, we really struggled to get there. There are like some guys at 25 grand, most at like 50. It's just it was a grind, and it took a while. And yeah, I mean now it's easy, but like I mean that was kind of the make or break time, I guess.
Yeah. Now, where were you when you first opened up to a C? I'm assuming 506C, right? With accredited.
No, that was all bees. Yeah.
Okay. All right. So what? And you said people were coming in $25,000 and $50,000. Where were they coming? Were those folks that had been watching you or following you or had been learning from you for a while?
Um, I hope so. I mean, for their own good. I mean, I think just a lot of them, like I knew just personally. They
Sure.
they weren't family. They were more like kind of investor colleagues for a while,
Sure. Yeah.
and they knew
Previous
I just
relationship.
wasn't some, fake it till I make it type of new guy, just who just didn't own any rentals that just decided that they could buy a 500 unit apartment complex in a few months, because they listened to it at home
Yeah.
um,
Now,
videotape.
have you stuck with the 506B since then?
Yeah, I mean that's kind of the vision. I mean, I stuck with her for quite a while. I mean, that was the vision. Like, I want to know all my investors personally. Um, I don't want to just Hail Mary and go out there and genuinely solicit for just random people out there, because when you do that, you get random people. And yeah, I mean, I have a big like no a-hole policy. I mean, the way I see this, it's a partnership. Sure,
Yep.
the passive investor doesn't really have marketing management ability, but we need your capital so we can do what we want to do, and you're getting above market rates for your returns in terms of
Yep.
returns. We need you as much as you need us. And what I don't want is some people have this thought process, some passive investors have this process that we are the client and you are our slave. Then I
That's
don't
right.
see it that way. Like,
Yeah.
um, I treat people with respect, and I would expect the same respect on the other side. That's just not
And
how
there's
I
a
want to run
big
my business.
misconception. I think there's a big misconception in this world, the same way with real estate agents. Um, people that stomp on you or that want you to send them deals, and then you found out they screwed you on one deal that you didn't know, and then you're like, well, hey, forget it, man. I'll send my deals to somebody else. Everybody wants a deal, so you had your chance, you screwed me, now it's over. And so it's the same difference. People just, and I think that's somewhat, I don't know, there's a big box store I think we all familiar with, that put customer service over and above everything else on the planet. And I think some of that has bled into the business world, where now all of a sudden somebody makes an investment and they think, well, yeah, man, you're going to do whatever the hell I say you're going to do because I'm investing with you. Hey, listen, nope, I don't know. And this is not the way it's going to work. You don't want to be controlled, but at the same time, you want to have enough control to make sure that the investment is successful.
Right. This ain't, I think it's Zappos maybe, where they're like, oh, you don't like the shoe, you can return it back. This ain't Zappos. This is not an institutional company here.
Yeah,
That's not what I wanted to do. And at the same time, we're not going to cater to every single little manini need of yours. But at the
yep,
same time, we're not going to like, you know, make the splits like this and completely dilute you out like third of the way through the deal, right? Like, that's not the kind of splits and
yeah,
hurdles that we do. We want
yep.
to keep people in for the long term. Um, but that's what institutional operators do. And you know what? Damn it, the institutional operators who have more than 3, 4, 5 billion dollars of assets under ownership, they deserve that track record.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
Right?
Yep.
But I
Yeah,
think
they
that's where,
they built it. I mean, yeah. And but the thing is that when somebody comes to you, if you're looking for institutional stuff like that, then go to institutional people. Don't come
right.
to you and I.
But some people want like they want somebody who's been around for 20 years that has done 400 deals, and they want that like white glove service. Like,
Yep.
well, you're not gonna get that. That's just not. That's just
Well, but at the same time, and I think you'll agree with me, when white glove service is costing somebody somewhere something, and most likely it's costing the end user something. So we either have returns that are here and you all we operate, or we have returns that are here and I'll do whatever the hell you want me to do. But you have to understand there's a delta between the two.
right. Like that's like the scope, schedule, budget triangle, right? Or like the
Yep.
project management. You want to check. You want either want it fast, cheap, or high quality. You can't have all three. But I
Yep.
think that's where some of these investors are just new, or they've got like a distorted viewpoint that they think they can handle all of it.
Yep.
I just don't do that. Like
Yeah.
I don't know, I just want to
And
work with good people that are cool to hang out, and we'll do some events where we meet people in person and hang out. Like I don't want those kinds of people who they want the high returns, they want the white glove service, and they want everything too.
yeah. Yeah. Yeah, and it does. And a lot of times, you know, it's a turn off when people voice that opinion, but at the same time, there's I was working with a guy. We were way back my first job post college. I was working with a guy, and we were in a brokerage business, and he looked at me and he said, he said, if you know somebody's a headache and it's going to be a bad deal before you ever even do anything with them, he said, there's way too many good deals out there to fool with a bad deal. Just forget them. Even though they'll buy something and you'll make a little bit, they don't want you to make anything. Just put them to the side and move on. And that's something to be. There's something to be said about that in every aspect of business. Troublesome people become a liability at some point, and you have to decide, being able to, your profitability a lot of times is going to be determined by how quick you can separate those people and move on.
Right, the whole 80-20, right? But I would argue that maybe it's more like 5%, 95%, or 5% of
I
the
agree.
people out there will give you heck of a lot of problems. I mean,
That's right.
I would say like over the years, like especially when we went over like $500 million of assets under ownership, like we definitely kind of, the principals definitely took ourselves out of the day-to-day business, where like a lot of the investor relations is done by staff, and maybe I would say maybe 5-10% of those questions that aren't the average questions on all deals get filtered up to the top, and maybe I might have to chime in or something. But the way I see it, it's like I need to kind of teach and train and educate my staff on those small questions that do come through.
Sure.
Whereas at that point, like the problems are done by staff, right? And I think that's and just like the management of properties, like we've realized that there are a lot of professionals out there who have been a property manager for 10, 20 years, that have maybe even created their own property management company or worked for a big private equity firm, that are much better at operations than we are. And this is kind of where we've to really scale past doing like a deal every single month, um, which is really kind of where we hit the growth stage. You need to get yourself out of the business and hire other professionals that are much better than you.
Well, yeah, that's almost hiring to your, I don't want to say your weakness, but that's hiring to your needs, by being able to say, hey, this is more than I can do on my own, or more than what I currently have can do. Let's make sure that we do keep the, you don't want to do a minimum amount of service, but you also don't want to have the service part of it become a liability, to the extent that it eats into your profitability or your returns for your investors. So all of that makes perfect sense, man. So I don't know, that I really like the way you've got things set up. How many active, I guess I'll say, how many active investors do you all have right now as a company?
I would say it's probably getting above 700 or 800
Wow.
nowadays. So I mean, in the beginning, I would like say, well, yeah, when it was like less than 200, it was like, yeah, let's talk and let's interact, at least once a year, let me know how things are going, what's coming down the pipeline. But obviously with that many, it's just not possible,
Well,
right? I
now
mean,
and
that
then,
I'd be doing 3
I,
calls every single day.
yeah. Well, and I'm sure the people that have come down the line that say your first 2/3 of your investors, like let's say you have 900 investors just for rounding purposes, you're the first 600 in that line have been in your deals. They know what to expect. They know what they're going to get. They know when their check's coming. They know a lot of different things. They know where to look in the statements for those things that you and I were talking about early on in the conversation. So there's they don't want to be bothered with the call just as much as you don't want to be bothered with the call. They just want to know when they're going to get their check. And then you've got that back part that's probably still learning the path. And again, once you create those systems and people know what to expect, I always said my kids don't ever, they act up 90% of the time when you throw a wrench in things. All right. Hey, we wake up in the morning, we're going to go here, 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 and we're going to end up here. Great. We get to the second stop, and all of a sudden now we're shooting over here to do something else that they didn't expect. Everybody loses their damn minds. And it's the same way with any business, any system, anything. Keep things, know that when you pull one thing out, man, you may not think anybody's going to notice it, but they won't. So if people know what to expect and know when to expect it, you virtually will run a problem-free business. As far as that side of it goes. And I don't want to act like everything's problem-free, but I hope you understand what I'm saying. So
Yeah.
anyway, all right, Lane, we've got a couple of questions. We're getting towards the end of the episode. We've got a couple of questions that we ask everybody that comes on the show. There's no right or wrong answer, but what is the best book that you have read in the past or are currently reading?
I would say Millionaire Real Estate Investor by Gary Keller. I would say that's a great book to kind of get started. A lot of real estate fundamentals, and I'm not a big fan of books, but I think once somebody reads that book, they're kind of good to go and just start
Sure.
doing it.
Sure. Yeah, just get in and go. All right. What is a dream vacation that you have either taken or hope to take?
I'd like to do like some kind of European riverboat thing. That kind of sounds fun. The one thing I don't like about vacations is like moving all my stuff around. So maybe that's what's cool about this book.
I got you. Good. Well, listen, if somebody heard something that resonated with them or they think they want to reach out and get in touch, what's the best way for somebody to do that?
Yeah, they can reach out at lane@simplepassivecashflow.com.
Simple passive cash flow. You can't get any easier than that. So, well, listen, Lane, thank you so much for taking the time to be with us today. And listeners, I want to encourage you to please go and leave us a 5-star good review so that the next listeners can really know and understand what we're about here. And we look forward to it. And we're always thankful for everybody that listens. And Lane, we're also thankful for you, again, taking the time out of your day to be with us. So hope everybody has a wonderful rest of the day. Lane, thank you.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.